The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 22nd day of February. My pleasure to be here. If it's you're listening to my usual noontime hour, this is the show that's recorded on Thursday at 8 a.m. Eastern Time. So it's pre-market opening, and I'll give you all the numbers, and we'll look at what's happening. Tomorrow I should be back to normal, back at the usual noontime hour live. So I'm live right now, except 4 hours earlier. So let's look at the market. The Dow closed yesterday at 24,797. Huge intraday reversal, but when you look at the chart, yes, it closed decisively under the 24,933, a 9-period exponential moving average. The MACD did deflect lower. It hasn't gone positive in the histogram. The stochastic's way down 55% negative action, but price-wise, I would have to say 24,200-ish, 24,400. Let's say 24,400 to 24,200 is really critical. Break that, and you're already forming the arch formation, what I call the lowercase h. And what's really interesting is, look, I drew this in yesterday. Look how this downtrend line, I call it the Chapman Wave falling axe formation. If you know my CD book, introducing the Chapman Wave methodology, I talk about this pattern. That resistance can remain resistance for quite a while. It's the declining tops and sharply declining bottoms creates an expanding wedge formation. And if there's a decisive close above this trend line, then all of a sudden you're looking at the potential for that becoming support and a potential 1-2-1 on the upside, measured move to the upside, which would take you to an all-time high. However, until we get there, that weekly chart looks very, very poor. Weak. W-E-E-K, W-E-A-K. And what we're looking at here is in the Dow futures, a little bit of an attempt at a rally. It's up 7, up 6 at 24,787. Of course, what I'd say to subscribers to my opening call, very comprehensive look at the markets. Plus, we have many positions. Some of them are very low price. We have one that's we're in at $1.68. It's trading very nicely high. At this point, you never know. By the end of the day, and we could be anything, in hundreds. It doesn't matter. I'm looking at chart patterns, and we take what we can. But I do have a preference sometimes if it's in the same category or sector. I'd rather get the low price one if it shows the same potential for the move upside, because the potential is so much nicer. It's better to buy a stock at 12 and have it go to 14 or 16 than to buy it at 120, even though the percentages turn out to be the same. The number of stocks bought sometimes can make a psychological difference, and that's about it. But it's nice to have that. All right. Let's get back to our futures here underneath the 9-period moving average in the Dow. The S&P, let's go to the ESH 18, the March futures, up 5 at 27.03. Had a very sharp intraday pullback, but I was talking about this yesterday in the show. It needs to break above and really close nicely above the 27.54.75 high of the 16th of February to decipher it as being the MACD would then probably turn positive. That would be good. The histogram would turn positive. The stochastic only at 59%. This is not good. Stochastic should really be up at the 69, 72% area. So far, that's what we're looking at. Make it real simple. I say to my subscribers, at 11:10, if the Dow is up 40 or more points, that'll be a positive on the day. If it's up less than 20 or even down, that's just not going to be very good action. And I think that's going to lead some of the market, even though the Dow was weaker than the other sectors yesterday. If you look at the QQQ, this is trading right now at 165.12, up 30 cents pre-market. That did make a leg B. And this is a much better pattern, actually, funnily enough. And the QQQ weekly chart is much better, but the technicals are still not very good. Monthly chart is still very strong. Let's look at the IWM, which is the Russell 2000. IWM did go to a leg C, so this is more mature in its waveform, and trading at 152.24 close yesterday. Now it's at 152.45, up 21 cents, showing a little bit of sector rotation so that you've got the smaller caps actually doing quite nicely. But the chart pattern here isn't even close to as good as the QQQs. Let's look at the, we're going to go to gold. Gold was down, it's still down 6 at 13.26. This is really not good action in gold at all. And one of the reasons is the dollar is finding some strength. We're unfortunately out of our long dollar position. We've had it twice. We've timed it great for the entry, but this time I just decided, I said, third time is usually the one that works, but there are too many other things going on. So I decided we would skip it, but actually the dollar at 90.11, up 3 cents right now, is acting quite nicely, but it really needs, I'll say it again, I've been saying it for weeks and weeks and weeks, until the dollar can get to the 90.75, 91.25 area and hold there. I just think these are balances. So let's just treat it as that for now. If you're looking at the EUR, USD, the euro-dollar currency pair, lousy action made a peak, D-top at 1.25. What was that one? I should have written that in. 1.255. 1.2555, and now what we're looking at is down at 1.2276. It looks like it wants to test the 9-period moving average of 1.223. That means we need to look at the USD JPY, which is the dollar yen currency pair, and that is trading at 107.09. Not very good action, very interestingly. It's under the 9-period moving average. Better hold 106.70 because it'll start to make that H pattern and retest the lows. It needs very much, I said this for a couple of weeks now, you need to see this thing trading in the high 109s, low 110s to really feel comfortable saying there's a trend change. This is just a bounce at this particular point. Let's go to the HG. This is the copper. Copper holding quite nicely. It's down a little bit. It's 3.19, and it's just on the 9-period exponential moving average. It needs to get to the 3.22 area quite quickly. Better hold 315, otherwise it's a problem. TLT, we're covering everything right now. Up 51 cents at 117.25. So this is recycled to a new leg D to the downside. There's an alternate count to the Chapman wave, and it's one of the reasons why I have these things. Everybody keeps asking me, what about this alternate count? Alternate count means we got to a G/C. You cannot go higher in the Chapman wave than a D. That took years to discover. So what happens is, so there was a C, G/C, and now we've gone, because of the recycle, we're in leg D. At this point, you can start to say, okay, let's see if we can go much higher, because this is now starting to go into new territory. And 39.45 is down 23 cents right now, but having hit 39.86, the TBT, the ultra short Lehman 20-year Treasury bond ETF, the inverse of the TLT, the Lehman 20-year Treasury bond fund, is in a very strong leg D. And if you go to the TNX, maybe I'll do that during the break, a break coming up right now. This is in leg E in the TNX, the 10-year Treasury note, and that is the yield. So this is really, and look, it's above the two Doji candles of the last 2 weeks. Whew, tomorrow's close is going to be really important. And I will come back and I'll have my triple yield chart so that we can look at that. What are we looking at here? I'm looking at, so I want you to go to this chart here. I'm going to get out of this short-term close workspace. There we go. And we're going to get the TLT. There we go. Yeah, the yields. Yeah, they come. So this is going to be fascinating. The white is the 30-year T-bond yield, TYX. The brown is the TNX, the 10-year T-note yield, and the 5 is the FVX, which is the cyan-colored 5-year T-note yield. And that right now is, look at that. So we're up 65 cents in the TYX weekly chart, leg C, only leg C, the 10-year and the 5-year ND. But look at the big moves. These are huge moves. I think this is going to disenfranchise the market to a certain extent. I think that yields are going to be an issue. I said that many weeks ago that I said at some point there's always a delay, but there's a real good chance that yields will be what really starts to make this market somewhat shaky. I think that's what we're seeing right now. Basil Chapman, Tiger Technicians Hour. The futures are the Dow's down -6 pre-market, and the E-mini is up, S&P is up 5. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, I was asked about GBTC, which is the Bitcoin trust. This is actually the investment trust. So it only trades during the market hours. It doesn't trade overnight. So this makes it really tough because you can get huge moves overnight in the actual Bitcoin and all the other cryptocurrencies. So I was corrected. I said it's a peak B, but actually nonsense. That's not. I missed. I for some reason I just didn't even see it. Usually I can identify even to a penny a peak or a trough. I just wasn't kind of concentrating. You made a low in GBTC on the 5th of February at 9.60. It runs up to, on the 8th, it's already at 14.95. 14.67 is the high the next day, so that makes a peak A. The floating ladder becomes a peak, and immediately it pops up the next day to 15.05 on the 12th. That makes leg B, pulls back to the 9-period moving average, spirals higher to leg C, which becomes a peak C on the 15th. So 1941 is at 1940 on the 16th, so that makes a peak. 1 penny makes a difference. And then it goes to a doji high yesterday of 20.40, and today's trading is 17.86, down 6%. These are big moves. I'm not interested in this until it pulls back quite a bit, and then I'm going to say if you are going to buy it, we're looking for a bigger move because the weekly is improved. I don't see the weekly chart improving. It's made a peak D top, and I'm just saying that this is looking to me. I do not want it in my traders corner, in my newsletter, until I really see the risk reward is there. I missed an opportunity earlier in the 14s because that was a good risk reward, and then by today we could have raised that stop very sharply to 16.90. 17 actually is the 9-period moving average support, and you would have locked in at least a gain if it didn't gap huge overnight, and that's the biggest fear. I need a good few points because of these gaps. And look, this is an island reversal with the doji candle. Got to watch this really closely. Should I go to the Bitcoin itself? Let me do that. Bitcoin trading. Okay, got it right there. It's a black background, so it's kind of tough to see. Not now. Here we go. There. So this is the Bitcoin. See what we've done is a daily chart. It's gone to the A. It's gone to an A, B, C. I think this is just a C in the Chapman wave, but it's pulled back quite sharply. And I got to watch this. It's at 9.838. I might be behind by about 15, 20 minutes. It can make a big difference, but it is under key moving averages right now. I think it's pulling back, and like the GBTC was telling us, it could be a couple of days of pullback. And that makes this move now in the Dow, because they don't go together, but there's a kind of a hint that trends are kind of following in sectors. So we're going to be watching this real closely. Why? And I'll explain why. The VIX index, the VIX right now, is down 13. It's under the 9-period moving average, but look where it's holding. All week, you've had a really nice move in the market, in most of the sectors, except for yesterday's late, that late hour selling. I think you've got to take that. That was either it was a shot across the bow or an opportunity. I think in some areas it is an opportunity. It will be an opportunity. But in some areas, you've got to take this quite seriously. So in the sectors where I've spoken about them being really good, they've held very well. This is a potential buying opportunity. We're taking the opportunity to do some buying, not yet into the shorts. We got stopped out of one of our long Dow positions. That's fine. Still have a very great entry. We had a very nice 3.3% profit on an index. That's pretty good from the lows that were just recently made. And so within the context of what we're looking at, the VIX index, if it starts to, it's 1989 right now, when you listen to this show at noon, 4 hours time, if the VIX index actually is trading in the 2130s, it's at 19.89 right now, then the Dow will probably be down minus 35 or so, and the S&P, instead of rallying quite nicely right now, it's up 550 in the futures, is only up 1 or actually down. I think that's going to prove to be a hint that tomorrow's close, we're going to be watching tomorrow's close really strongly. Why? Let me show you. Let me just run these real quickly. INDU, look at the Dow. This week, the MACD is so on the left in the Chapman wave methodology, we're looking at a peak D at 26,616 on the 26th for the Dow, plunges to 23,360 on the 9th, rallies very sharply to 25,432, trading right now, the pre-market at 24,797 on the cash. So if there is a move, I would say if you're in the 24,800, 24,830s at this time in the afternoon, that is at 12:25 Eastern time, I'd say, okay, you've saved the day. You can have a reasonable bit of a rally here. But I'm watching the lowercase h that can go to a lowercase m. That's going to be the pattern to watch. And if you're looking at the weekly chart, look, under the 9-period moving average, very sharply under 25,054 is the Friday number that you got to be watching. Under that is a negative, and I'm not sure what's going to take it to 25,500 25,050 right now. S&P cash, SPX, if you're looking at the weekly chart, also under the 9-period moving average of 2718.30, trading at 2701 right now. MACD is very poor, stochastic is very poor. I have to tell you that I'm very close to switching, I think, from the long side to the short side. I don't want to do it prematurely, rather than maybe let the stops do the walking for us. But if there's a really strong rally into Friday's close, we could have run out of that energy to the upside. I'll be right back. Basil Chapman, Tiger Technicians Hour, and the futures are down. S&P's up 3, the Dow's unchanged. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So let's go through a couple of things here. We were looking at Amazon yesterday. So Amazon makes a new all-time high. That's really important because in the weekly chart, within the context of looking at a very strong MACD, what I'd said is that the stochastic was pulling back, it had pulled back under 80%, but it was flattening out. And that fast-moving average of the MACD, that's really important because it's showing internal strength. In fact, it looks, if you look at this line here, this is the middle chart, look at this. You see that? Now look at the price. You see how it follows the price so nicely? Sometimes you get a divergence. Look at this. Here, the green line has just crossed positive, but it's way underneath the previous high that was made at 1498, round number high, on the 2nd of February. So this is where I say to myself, okay, keep in mind that it's very positive that there was a new high, and that high was at 1503.49. So let me type that in, 1503.49. It gets hit with a selling yesterday, and I've got this now as a leg E/B. Let me explain that, because a lot of people ask me, what is this alternative count? Over the years, I found that when you get a cup formation or a V formation, a V is usually a little bit more powerful than the cup formation, because the V doesn't take as long to form. It goes straight down and straight up. A cup has this rounding bottom, then it makes the low, then it has a rounding boat or cup formation to get back to the top. By that time, you can look at the MACD and stochastic, and very often they fail. Here, the stochastic went back to 83% in the daily chart. MACD just crossed positive, but the 9-period moving average of 1441 is much, much lower, 40 points lower, right? And we're watching this, and there's a chance that the MACD could deflect if the general market turns down from here. So this is why I put an E. I pick up the previous letter. Why? Because the low that was made to start this alternate count was right here with the Chapman wave instant restart right there. 2 bars, and it makes a new high after a D. And so that says this is E/A, F/B, G/C right here. And then you can't go higher than a G in the Chapman wave methodology. So that becomes a D. D is what you look for in the Chapman wave for a potential change of trend. You get your change of trend, pulls back sharply, but look how much higher it is than the low that was made at 1237.23 on the 10th. So this means that you can treat that as a continuation pattern to an E, but also if this becomes a new buy mode, and I have to put trough A, trough B, only two troughs to the downside, instead of a plus sign, if there's an up arrow, and that would be, I'd put that in. If it went to an F/C and it closed nicely above the 1498 high, I'd say, hey, this definitely looks like a new buy mode to me. But right now, it looks like it's a residual, like a little coda effect. So this is going to be very important. What happens over the next few days? So Amazon is a clue because it's helping the QQQs, and it's also helping the XLK. Let me just look at the XLK. XLK right now, this is the tech sector of the S&P. Yeah, there's that falling X formation we were talking about just a short while ago. Here it is in the XLK, trading at 67.13 pre-market, up 32 cents, and it had a high yesterday in leg C of 68.07, and it never broke out. It tried to, but it couldn't break above this trend line. So now you have to see something in the area of 68.15 or higher. 68.07 was a high. 68.08 starts an extension to leg C, and if it's tomorrow goes higher, then that would be a peak D. So this is all very interesting because the MACD and stochastic are still very poor. So we were watching the XLK. SMH is the same thing. We do not have a position anymore. Got stopped out of all our positions, short positions, for really nice gains. And now what we're looking at is here as well. We've got this Chapman wave falling X formation, not 100% kosher there, right there, and right down there. Okay, make it real simple. Trading at 103.69. The SMHs, and this is going to be a clue, if the SMHs by Friday afternoon are trading anywhere near 106, well, anywhere near 105.90 to 106.10, that'll be very good action. If instead it just chops it and it doesn't go above 104, in fact closes below 103.69, yesterday's low, and it's going to say, you know what, we've run out of energy in the semiconductors. So I'm going one step at a time. Question I had about, whoops, where did it go? IYT, we always look at that. That is the iShares Transportation Average ETF. See this arch formation, lowercase h? Doesn't look good. At 187.03, it actually has to get to, I wouldn't even say 192. It has to go to 192.50, but another 5 points up from here over the next 4 or 5 sessions. It really needs that. So after yesterday's smash to the downside, huge intraday reversal, to only be up 18 in the Dow right now, to be up 5 or 6 in the E-minis after a whopping turnaround, I would say that that is very, very weak action, but the day is young. Let's do this again. If by 10 minutes past 11 Eastern Time today, the Dow is up over 40 points and holding, E-mini probably will be, S&P, let's say, is up 8 or more, then I say, good. Nice little turnaround in a trading band, nothing really strong. If the Dow is up 100 points, you never know these days, right? 100 points between 11 o'clock and 12 noon, then that's a little different. That's going to be the good action that I was expecting if yesterday was a false move to the downside. I don't think so, and let me show you why. When you're looking at the TNX, which is really the benchmark, that is the 10-year is what they use a lot. Down 26 cents right now. The 9-period moving average of 28.84 is very important. If, in fact, it's a little toppy, you see the MACD is starting to struggle now, it's starting to test the slower moving average, but the stochastics at 87% and still very strong in the daily. The weekly is at 94% and the MACD is still expanding. The monthly chart is broken out to a leg B. This is not to be dismissed. This is having an impact, and it's having impact on the housing sector. So if you're looking at this, if there's just a high-level consolidation, doesn't break below 28 over the next week and a half, in fact, it even tries to test 29.50s, 2.95, whoa, that's going to be very important. Why? Because the HGX, look at this. HGX is making that arch formation. It made it, this is a G, let me call this a G right now. Call it a G. Yeah, this is a G in the weekly, putting a down arrow, and what we're looking at is a little maybe arch formation, really struggling here in the Philadelphia housing sector index. And if there's a pullback below 325, it's a 328 right now, in the next couple of days, that's really going to be poor action. 337s is the 9-period moving average in the weekly chart, and it hasn't been able to get there at all. And MACD is very poor, but the monthly chart is still looking quite good. It has 3/16 of the 9-period moving average. It tested it, and now it's much higher. But I'm watching this real closely. Housing. We'll be back. The Dow is up. The futures up 35. That's a good sign. And the S&P is finally up 9 in the futures. I'll be back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi folks, we're back. So I was asked about Merck. Merck Pharmaceutical, trading 54.90 up 35 cents. Lousy pattern, peak A, peak B, gray. Made a major peak E, top in the 63s, trading right now in the 54s. Ugly, ugly, ugly. It just doesn't look good. But it has a way of looking ugly and then starting to form a right side base. So what I said is 53s needs to hold on a closing basis. It cannot close under 53. My number one. Number two, it really needs to get to the 56s within a few days, maybe by today's Thursday, maybe by next Tuesday or Wednesday. It really needs to be up in the 56s. At least it's trying to form a base. If it does that, then you can go to 57, 58. But if you're looking out longer term, you don't have to just get out right now. If you're a longer term holder, see if it, look, a 1.5 doesn't make a big difference. See how it tests the 53s over the next few days. That's kind of where I'd lighten up, definitely. So that's that. So within the context of looking at the various sectors, I wanted to show something here, if I can get to it. This is the XAL, which is the airline index. The ARCA had a really nice bounce from the 108s. Was that 108? 108.38 low on the 9th. In a leg A, single leg A to the upside here. It's really improved the weekly chart price-wise. But I'm a little concerned that the stochastic still at 56%. And the monthly chart, thank goodness, it went from under the 9-period moving average of 113 to the 108s, and now it's up in the 118s. So this is going to be very important, watching the airline index. And the reason why I said to subscribers to my opening call, we often look at a stock called Cintas, CTAS. We don't have a position in it. Sometimes we do, sometimes we don't. It made, it's under the 169.96 high of January the 31st. It's in overalls, uniform rentals. I always look at this as kind of telling me a lot about the economy, the infrastructure economy here in the United States. And it's got this very sharp V-shaped pattern. It goes from 169 down to the 140. Was that the 147s? 140, yeah, 147.38, and then right back again. And if I do a left side, right side price time match in the Chapman wave methodology, look to the pivot point, the low that was made right there. Look at that. If you use that exact plumb line right there to the low, and you move this to the right, we're right at this particular point. Look, new parallel. We do this and we go to the right side, make this green. Yesterday was the exact day of the left side, right side price time match to 169.96. And where does it go? It goes to 169.72, 14 cents lower. 14 cents lower. And look at this. Isn't that interesting? The MACD is much lower than it was at the high on the 31st. But this V-shaped pattern is really what I'm monitoring. And one of the reasons is that if Cintas happens to break into the 172s over the next week or so, and then holds there, I have to consider that that's telling us a lot about the economy. And if I look at stock like Marriott, I like to go to Marriott, It made an all-time high on the 30th of January at 149.21, drops to around number 131 low, tries to rebound, and it was looking good yesterday, and then it couldn't break above that previous high for leg C of 145.41 to go to leg C. The high on the 14th was penny lower, and it couldn't do that. So this, to me, is also something to monitor, and I'm watching this because I'm talking about internal low and residual low. Let me go back to the function of that. If you're looking at the Dow, the low that was made on the 9th at 23,360, look what happened to the VIX index. On the 6th, 3 days earlier, it made its high of 50.30. And since then, it's been declining. And even now, it's down 29 cents, down 1.45%. So, but it is way above the 12 area, the 200-period exponential moving average. It's even above the 50-period moving average. If it holds in this area, it's suggesting that fund managers are very suspicious of this rally and that they are considering that there is still a level of downside activity to come, even if it's maybe sector related, and they want to be holding volatility here as an insurance plus a trend. And I'm looking at this and saying, if tomorrow, Friday, there is a move above 21.30, 21.24 is the 9-period moving average, that'll be extraordinary. We haven't seen this kind of action in a weekly chart. Let me show you. This is the weekly chart. We have not seen this kind of action holding for 3 weeks, 4 weeks above the 9-period moving average since way back in when you had the global China fears and Fed rate fears back in, I forgot to put the date, back in January, the week of January the 22nd, 2016. Let me just put that in right now so I don't have to do it over and over. So this is 1/22/16. I mean, hey, we haven't seen that. And there isn't anything quite like it right now. In fact, the economy seems to be doing okay. The rates are the issue. Look at the difference in rates. The rates are way, way higher. Oh, whoa. 122.16, let's go there. So 122.16, 122, just move this all the way across, squeeze it closed. There we go. January, the week of the 122, there it is. So this is where, this is it. Let me put in a right there. Look at that. This is where rates were at that time. So we are way higher in all the rates from that period, way, way higher. And that's an issue. And I consider it to be an issue. It's going to affect and effect some of the sectors. So I'm not dismissing it at all. And that's the reason why I think what we're looking at is there's a potential for a stalling formation. Remember, I spoke about the work that Dave White's done with the 9DMA. And my contention was that, yes, it's a fantastic tool, but now we have to have the evidence to say that lows work, but do the highs pull back above the trading band that's been set up? Do the highs now say, okay, this is just a high, but it's within a down move? And that's really the big test. Have you had a trend change in the larger aspects, say in the monthlies and the weeklies, that affect the dailies? And that's really what we're going to find out. So let's just go through this again. If at, this program is at 10 minutes to 9, of course, Larry Pesavento comes up at 9 o'clock Eastern time. Great programming there. And then we've got Tom and Tommy, Think or Swim. And we've got Nadex platform. And then we've got, usually it's my show at noon. So this will be recorded. And if this at 12:50, 10 minutes to 1, the Dow is trading 40 points or higher, that's going to be good. S&P maybe 8 points or higher, that's going to be good. But anything less says, stalling motion is in place. And what's the volatility index? If it pulls back from 1967 right now to say 19.42 or lower, that's going to say, okay, some buying pressure. Then, of course, you've got Steve Rhodes at 1 o'clock. You've got Dave White at 2. You've got Tom O'Brien back again at 3 o'clock. And at 5, you have Andy Heck. Great program. Don't forget, we've got the Tiger's Den and that's open. I mean, just fabulous comments made all the way through the day in the Tiger's Den. Check it out. It's free for this month, and I'll be back. Now it's just probably up plus 50 in the futures.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. So the E-mini is now up 11.75. Something happened, and it really triggered a good rally in the market. Yeah, this is a very important bounce after yesterday. Wow, if we can't even bounce, that would be very poor. So I just got an email. You know, this is one of the junk mails that gets sent. America's most expensive margarita to be served in New York City in recognition of National Margarita Day. New York City restaurants will celebrate the 70th anniversary of the first margarita by breaking records and offering America's most expensive margarita using world's leading tequila. So there's New York, February 22nd, and it's going to cost $1,500 per 750 milliliter retail. Yep. Additionally, the cocktail will be rimmed with a blend of exclusive Mexican salts and garnished with a fresh cut of lime, spiral cut jalapeno, skewered by mini beach umbrella and complemented by rose petals. This, of course, the margarita was invented in 1948 in Acapulco, Mexico, small beachfront paradise by Margarita Sames, and began to rise in fame. This is very interesting. Why? Because it fits into my bigger, better, wider, taller phase that we're in. And that was really important to see. You never know where it's going to come from, but it's the margarita at this particular point. And it's just part of the phase that we're in. Now, a couple of things. Within the context of markets, I was asked, what are we doing? For my subscribers, we are long. We're trying to buy some longs. We're trying to enter certain sectors long. Not yet pushing the short side, although we have a short. The short that's left is the home builders. It's really acting very poorly. So look at this chart very carefully. You need to see the Dow by Friday. I want to see the Dow in the 25,060s because it needs that. I don't know how it's going to get there, but that's what it needs. If it fails, it's this trend line resistance. And at this particular point, the third week, I'd say the third week after the low was made is going to be the tough week. This is the week. This is where I was expecting the pattern, the H pattern, would be a test, or the V-shaped pattern. So far, it looks like the H pattern. Keep that in mind, and I'll be back a little later on today with Tom O'Brien. Have a great one, and of course, this is recorded. Stay tuned for either Larry or Steve Rhodes, and I'll see you later today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.